Hi everyone, I am 𝐂𝐨𝐧𝐭 Puri. I am delighted to welcome you all to this session on income tax return filings, which is a part of the CTC Gyan Shorts series. At the outset, I would like to congratulate CTC and all the stakeholders on the occasion of the centenary year of the CTC. It is indeed a marvelous achievement and I am proud of contributing towards its objective of spreading knowledge. Today, the topic of our discussion is going to be scenarios in which you will be required to file your income tax return, especially in absence of income. Tax season always brings the same question. Do I need to file my return of income if my income is below the basic exemption limit? At first glance, the answer seems obvious. No taxable income, no return. But India's Income Tax Act doesn't look at life only through the income earned lens. And frankly, that makes sense. Think about that friend on Instagram whose weekdays are a blur of exotic vacations. When you meet them in person, they complain, "Oh, I'm broke." But somehow they are sipping sangria in Spain or partying in the Seychelles every next week. If you're wondering how the math works, so is the tax department. That's why the law says even if you don't have taxable income, certain people must still file a return. It's the government's way of keeping a record of big financial moves, lifestyles, and transactions that otherwise slip through the cracks. Now, what is the basic rule? The basic rule is that companies, LLPs, and partnership firms have no escape. They must file every year, even with losses or nil income. But for individuals and others, Section 139, subsection 1 requires filing if your gross total income before deductions under Section 80C, 80D, etc. exceeds the maximum amount not chargeable to tax, which is your basic exemption limit. Now let's get into the lesser known but equally important triggers. So even if your income is below taxable limits, you are still required to file your income tax return if you cross certain spend-based or invest-based thresholds. Now here are the key triggers. First is if you want to claim a refund. If you cannot claim a refund of TDS or TCS without filing your income tax return. Second is if you want to carry forward your losses. To carry forward your losses for reducing the tax liability in the future years, you need to file your tax returns and that too on time. Third is if you have spent more than 1 lakh rupees a year on paying electricity bills, you must file your income tax return. Fourth is for foreign travel. If you have spent more than 2 lakhs on yourself or for anyone concerning foreign travel, filing your ITR is mandatory. Fifth is on huge deposits. If your total deposits in one or more current accounts cross 1 crore in a year, for savings account, the corresponding limit is 50 lakhs. You must file your income tax return. Sixth is your business turnover. If your gross receipts or sales from business exceed 60 lakh rupees or 10 lakhs in case of a profession, filing your ITR is compulsory even if you have losses. Seventh is TDS and TCS. If TDS and TCS in your file crosses 25,000 in a year, the limit is 50,000 for resident senior citizens, a return is required. Eighth is foreign assets. If you are a resident and have foreign bank accounts, assets, interest, or even signing authority, you must file no matter what your income is. And last, to claim relief under tax treaties. A relief under tax treaties on your foreign sourced income is not automatic and requires you to file your tax return. So the question is, why does the government do this? See, it's not about taxing the small guy, it's about data. If someone is depositing crores in the current accounts or spending lakhs abroad, the tax department obviously wants a paper trail, even if the person technically owes no tax. In the 21st century, data is the new gold. So why should you file voluntarily? So even if you are not compulsorily required, filing on a voluntary basis helps. It strengthens your financial profiles, speeds up your loan and visa approvals. It ensures refunds are processed smoothly and even acts as a shield later on if the tax officer comes knocking. So think of your ITR as your annual financial report card. Now, closing thoughts. Not having taxable income doesn't always mean you're off the hook. The law today looks at how you live, how you spend, and how you transact, not just how much you earn. So, there's a nice saying, in taxes, silence isn't golden. Being in the system is. So before we end, here's a disclaimer. The information provided is for broader understanding and does not constitute an opinion, and neither the CTC nor the speaker can be held liable or responsible for the views and interpretation given. The video is not a substitute for formal legal opinion. Thank you and have a great day ahead.